And we
All right, we
do it.
are live July 3rd, 2:05. Sorry about being late. And we're just ready for the 4th of July, right? Are you?
I think everybody's ready for the 4th of July.
Everyone's ready?
It's been pretty nice. A lot of fireworks being sold. Big thing in the news is that fire in, where is it, near Woodland,
In
towards that
Esparto?
area? Yeah, Esparto. Did you hear about that?
Yeah, I did. I saw a video of like the actual explosion going off. It was crazy.
Yeah.
And, there's several area locations that store their fireworks there and complete loss. And there's
Absolutely.
also apparently, it's like a crime scene because there's still some unaccounted people that were working there. So thoughts and prayers for that for sure. But I actually just saw today one of the counties or the cities that has their fireworks show, like that holds their fireworks there. They already got backups coming, so they're going to have a 5th of July.
Oh, okay. They
Yeah.
got something at least, right?
Yeah, something. And maybe it'll be a tradition. One of our local towns, Colfax. Are you familiar with them? So they've got their 3rd of July. They've been doing that for years. It's really nice. They like shut down the city. You get to go walk through Main Street, and then they shut them off, or they set them off right there at the railroad tracks, which is kind of cool.
I'm thinking we're having some technical issues because my YouTube and my Facebook are not going live.
Oh, really?
Did you go live on MSIS on your Facebook page?
I did, yeah.
I don't see it from my side, so maybe it's just the lag.
Yeah, it could just be a little lag. I
check
show
again
them
if you do that.
live.
Can you check Kamara Insurance Agency?
Oh, of course. I don't see it live in the top little bar. Yeah, you're not live.
I wonder what's going on here.
Can you, on your end, start the stream?
Amplify this event by streaming. I have it on. They're both on.
Here, I can edit the channels, and I can also, you want to go live Facebook and
YouTube, please.
YouTube. You got it, buddy. I am sending the data now. It says your Facebook is, it's still sending. So let's see what actually happens on this.
We haven't had this new technical difficulty yet. So
nope, there we go. You're live on your Facebook page.
Nope, I see it now. Perfect.
And then not sure about YouTube. It's still thinking about it. So
but you made it live. You had the ability to do so as the admin.
Yeah. You're live on YouTube. So
Awesome.
You're set.
Thanks for that.
The power of the Restream.
Yeah, good. So while I'm checking this, tell us your good news. You have a bunch of good news to share, and I saw you posting it all over the internet. So
whoa. I didn't necessarily post it all over the internet. I just went to the East Main Street Insurance's page. I also tagged myself, just wanting to let the world of my connections know that I am now the owner of East Main Street Insurance. So that's pretty exciting. I've been here for almost 8 years now, and been running it for about that time as well. That's why I was kind of hired on, and have just been granted authority and the opportunity to move forward with the agency as an owner. And it's just it's a lot of emotions. I think I said, like, there's just already day one, the hats are coming in, and this as a agency owner.
Oops, I'm sorry. Yep, absolutely. I made a mistake here. 1 second.
Yeah, there's a few hats that you got to wear on a daily basis.
You want to approve that again?
Yeah. Yeah, between banking and updating carriers and logins, it's a lot.
Absolutely is. Yeah. That's actually a real background. I'm going to use that today.
You're out in the park?
I am out here in Roseville and had a meeting run late, and I'm just deciding to do it out here since it's such a nice day at the moment in the shade.
Yeah, what is it, like 90 degrees today?
It's only 88 at the moment, so
Oh, that's not bad.
not bad at all, especially in the
Not
shade with a
bad.
nice breeze.
Yeah.
So for the purpose of me not interrupting you and our technical difficulties, let's start that again really quickly. So, you, how long has East Main Street been around?
So East Main Street's been around since 2006. Started by Will Maddox, another local here in Grass Valley.
So
He's out of
19 years, and you've been
19
there
years, long
8 years,
time. Yeah,
and
we're a
then
teenager. We're an adult. We're an adult now. We can vote.
and so you've East Main Street Insurance Services has been around for 19 years. You've been there 8 years,
Mhm.
and as of what day did you officially take ownership of the agency?
July 1st, 2025.
Cool. So you are the owner of East Main Street Insurance Services, which is another local in Grass Valley taking over and supporting people in their community, correct?
Yeah, yeah. There's a few of us here in town, which is nice. I do all lines of business, home, auto, all that fun stuff, business.
Cool.
So,
That's a big deal. Congratulations.
yeah, thank you so much. I really appreciate it. I try not to tell it, everywhere. I was just posting it here and there and updating things.
Hey, once you make it public, it goes everywhere. So
Once you put it on the internet, right?
yeah, exactly. Exactly. Can we remove that part that says messages from the audience will display here? We don't have to if we can't.
Where does it say that?
Oh, maybe it's not showing up. Let me just check real quick. And then for if there's anybody listening or if they ever look at it back over, this is our office hours. So in addition to going over relevant homeowners insurance information, this is where we're just going to be available to anyone that wants to pop in and ask a question, and we can answer it live. So we're chopping this up a little bit. It's not just one full stream. Oh, by the way, on live, it doesn't show that, so we don't have to worry about changing that on the screen, which is great. But yeah, we're here to answer questions, and we've got a couple of topics to go over. And I don't see any questions or anybody, so we'll go on to the two topics we're working on today. So the one that was the easiest for me is there's insurance carriers now out there, specifically on the E&S side, where if you have a comp shingle roof, and no matter what the person selling you that roof tells you, um, even if they say it's a presidential shingle 50-year roof, the insurance carriers only cover it at the best coverage, which is a replacement cost value, um, for a specific amount of time, depending on how old the roof is, right? Is that what your experience as well is as well, Ryan?
Yeah. Yeah, there's definitely a handful of carriers that's 25 years. Some of them are 30 years. So maybe check with the insurance carrier that you're working with, who you're appointed with, or who you're paying on a monthly basis, or who your insurance provider is, and ask them what their roof year is, because it could change with each carrier. So I don't want to say 25 years and the other one's 30. So definitely look
I got
into
one
that.
that was 10 years. They go from replacement cost to actual cash value or the
Yeah.
depreciated value of the
Yeah,
roof.
10 years. So, I mean, that's got to take a hit, because a lot of roof people say, oh, we guarantee your roof up to 50 years. And if a carrier is not going to even give you a replacement cost on it, It's almost like, what's the point of doing the added 40 years or 50 years,
Sure.
whatever the lifespan is.
Well, I'd go back to the roofer and ask that question, right? Like,
Yeah.
hey, you said this roof is going to last me this long.
Yeah, but I'm not reaping the benefits from my insurance carrier for it. So
Mm-hmm.
yeah, and I think that also kind of plays into the insurance market as almost like a nationwide whole because of all the claims, in the Midwest with hail damage and the wind damage in Florida, and roofers would come out there and say, oh, you've got some problems with your roof. We'll give you a whole new roof. So I feel like the insurance carriers have kind of been burned on a lot of it.
They have, absolutely. That's resulted in major lawsuits and major costs.
Yep.
And then that also plays into carriers changing deductibles. I mean, I know we've gone over it in the past, but deductibles, when I first started the agency 3.5 years ago, deductibles were $1,000.
Yeah.
And now we don't quote anything less than $2,500 and maybe change it if a client would like. But the premiums have increased to a point where it makes more sense. And then my conversations with clients are you really going to file a claim for $1,500 knowing that it will or could possibly result in you being non-renewed the following year or your rates going up significantly?
Right. Yeah, a lot of people, they've been with them for 40 years and they've maybe already had that claim instance happen where they saw, hey, I'll just pay the extra couple $1,000s out of pocket, do the work myself instead of filing a claim. So yeah. But to new homeowners that are out there, and I think we covered this in a few podcasts ago, you definitely want to see what the company is going to be taking on, like maybe what their cost difference is with those different deductibles.
Yeah, and I model it all the time. I mean, people tell me they want a $25,000 deductible or $10,000 deductible, and I say, hey, are you sure that's what you want? And if they have the financial means to pay for that, and they want to take that, pretty much self-insurance, right? You're self-insuring a sliver of any type of catastrophic loss.
Yeah.
I mean, great. They can do so if it makes sense for them.
Well, and that's where you're also providing them, like, here's 25, here's 5,000, here's maybe what the split deductible is.
And I'm seeing it more and more as I'm quoting against other insurance agencies. I'm seeing more and more that they're going to not even to a dollar deductible. It's more like Texas and Florida where they're quoting to percent deductibles now. So, I've seen quotes that I compete against that they're maybe $100 or $200 cheaper.
Right.
Yet my deductible is $2,500, and that 1% deductible, let's say a $500,000 house, is $5,000.
Yeah.
Have you seen anything like that up where you are?
No, I have seen the split deductible a few times, but I've also seen like that percentage, like you're mentioning. I think only a few carriers are using that percentage deductible that you're mentioning.
Yeah, we didn't even talk about split deductible. We might have in a prior podcast. Do you remember?
Okay. Yeah.
So forget totally related but not the same. So what we're talking about is deductibles being a full deductible for 2,500, 1,000, and now I'm starting to see percentage deductibles, 1%, 2%. What Ryan's talking about is split deductibles. So these are coming from excess and surplus carriers. I only think it's excess and surplus, right, Ryan?
Yeah. Yeah, I think that's kind of the only one.
And they carve out. So they've got your all perils deductible, your water damage, your theft, your those kind of things,
right,
at, let's say, $2,500, and then they have the wildfire deductible at 2, 3, 4%. I've seen some of these ones that are like
10.
I don't know. Yeah, it's 10%. I've seen. If you think a $500,000 home with a 10% wildfire deductible, you're looking at $50,000 deductible right before that it kicks in.
Yeah.
The beauty of that, though, is that the beauty of that part is that it only applies to wildfires, and these
Right.
carriers that are offering this have a specific definition. So your kitchen fire would still be covered under your lower deductible. Your office fire or bedroom fire would be covered under lower deductible, and those typically don't result in a total loss of the property. Where wildfire, we're talking about a total loss of the property. So it's got its pros and its cons. I mean, I know a lot of people that would take that risk with a higher wildfire deductible to have a lower premium.
Yeah, it's coming through. Yeah, and I think even some of them actually now are saying the named wildfire too. So sometimes there's maybe even a wildfire that pops up and it hasn't been declared yet by Cal Fire or one of the other organizations, so it's not a named fire yet. Maybe it's just a small fire that pops up, like you say, your
Burns
kitchen
a couple
fire.
houses down,
Yeah, or burn a few houses down. So
but doesn't get an actual name from some government body, and
yeah.
then that wouldn't count as wildfire. It'd be just regular fire, which would be the lower deductible.
Mm-hmm.
That'd be pretty cool. I haven't seen that yet.
Yeah, I mean that's I guess why you check the policy, because I've seen a couple named wildfire. I've seen just regular wildfire, so it really just depends on that language, what they're offering, and you kind of got to be this insurance sleuth of your own, or you just
Or
call
talk to an agent.
up. Yeah, talk to an agent.
So a good segue into this is, and we may have touched on it before, but I think we need to spend a little bit more time explaining what is an admitted carrier versus a non-admitted carrier. Do you
Mm-hmm.
want to start with what is an admitted carrier?
Yeah. So an admitted carrier is going to be a carrier, kind of like the names that the Allstates, the State Farms, the Travelers. They have offices here in the state of California. They provide you with protection from the California Guarantee Association. This is only for, say, if you've got a huge loss and that carrier now goes insolvent because they run out of money, the California Guarantee Association is going to help pay for your claim up to $1 million. So,
So the California Guarantee Association, um, that is a fund paid into by all admitted carriers. And admitted carriers means that they're admitted into the state and are regulated by the state. They can't just randomly change your rates at renewal. They have to file and get approval by the California Department of Insurance.
yep.
So that's an admitted carrier. And then we have, well, what right now we have many admitted carriers not writing still. We're in the hardest insurance market in probably over 32 years now. And so a lot of the admitted carriers have pulled back on writing, and what's come back into the market now is excess and surplus carriers. And these are non-admitted carriers. So they don't pay into that fund. And then they also don't file their rates with the California Department of Insurance. They can change their rates at renewal anytime they want for whatever reason they want.
Yeah, as soon as it gets approved, they want the 7, 10, 20%.
Oh no, I'm talking about ENS. They can do that without filing anything
Right.
with the California Department of Insurance. So I've heard a very, very smart agent mention this, and it really only started to click with me recently. Is when you place with an ENS or excess and surplus carrier, it's cool. That's the rate now. We'll see what next year looks like, and we may shop other carriers. So I've got a couple of clients that have gotten renewals with one carrier in the 90% area, and so it's almost double, right? And those are clients that we're shopping with different carriers now to see if we can find a better rate.
Yeah, because and they're not regulated like say on the admitted side, where you can only file 7% a quarter.
Oh yeah,
So
they can do whatever they want.
they can go out and file once a month if they want. Granted, you're not going to be susceptible to that until your non-renewal date or whatever your renewal date is. But
and I've had that question from a number of clients. They've come to me and said, "Hey, how do I know it's not going to change next month?" And I have to remind everyone that your insurance policy is a contract. It doesn't change until that contract period is up.
is
So
over.
for us, it's 12 months. So your rate with the ENS carrier cannot change until you're at your renewal period. When you get your renewal documents, that's when the rates will be reflected, whatever it is, same, different, goes up, etc.
Yeah, that's where maybe hopefully in the state that we're in, we can lean on, because we have to take more advantage of the non-admitted companies. We can lean on them not taking rate and waiting until the admitted carriers get their rate approved, and then they re-enter the market.
But what we're seeing with admitted carriers is the excess and surplus carriers aren't that far off on premium, right? I mean, we're not seeing an admitted carrier come back into the market after getting 30% increase, and they're super cheaper, right? They're not too far off on what the ENS rates are currently. Have you seen a great variance on any of them that come back in?
I haven't seen a variance, but the other thing too is that I'm not seeing a lot of admitted carriers even offering.
Sure.
So
Yeah.
if they are and they're getting their rate approved, I think it's going to be a little bit of time before they do re-enter the market, and then there's more competition that sets in. But even now, like I think the other day, I literally just lost a client from a non-admitted market to go back to Fair Plan because of the cost. So I think that non-admitted companies are starting to really take advantage, I think, of the situation and filing for pretty high rates. I mean, granted, they're also covering themselves and, accounting maybe for future losses that could come up where,
Sure.
it's plausible, but.
And then the other thing is you brought it up for the Fair Plan. So I guess it's a good thing for us to clarify that the California Fair Plan is an admitted carrier.
I wouldn't call them I wouldn't call them an admitted carrier because they're comprised of all the admitted carriers.
Correct, but they cannot file rate. They cannot adjust rates like an ENS carrier. They still have to be approved by the California.
Yeah, I get. Yeah, on a rate standpoint, they do have the same sort of criteria where they have to file for rates with the Department of Insurance and get them approved. And the last one took 2 years.
Yeah.
There was a lot more, I think, that they were embedding into their underwriting guidelines with the wildfire hardening, and they were changing over from I forgot, it was ISO form to Zesty form for how they were rating risks and whatnot. So there was a lot kind of background stuff happening, but yeah, I guess in that tense of rate filing, I guess you could name them as an admitted company, but they're not admitted because they're comprised of all the admitted companies. They're
Correct.
just a risk pool.
That's the funding mechanism, right? They're a risk pool.
Yeah.
I'm jumping into our websites and looking to see if anybody's asked any questions. I don't see any questions, so it's going to be a light day today with the holiday. I don't think a lot of people are working, and I think a lot of people are just getting ready for the 4th.
Yeah.
For your county, do they allow fireworks?
Yeah, we've got fireworks. They're set off over a bridge, over a highway. So
that's a show. I'm talking about for individuals.
Oh, no.
I know that unincorporated Sacramento County doesn't allow fireworks whatsoever.
Right. No sparklers, nothing fun.
Got it. Okay. Where I grew up in Hawaii, there was no regulations whatsoever. Those were the great days where, we had jumping jacks and all these crazy things. And I was
Roman candles and
Roman candles were fun. Yeah, absolutely. I didn't know any better. I was a kid then. Those were a lot of fun, but you realize now how much of a risk that is, right?
Oh yeah.
I love fireworks shows. It's great. I've driven through one of the freeways, whether it be 80, 50, 99, or 5 on a day where there's fireworks going off, and you could see illegal fireworks. It's a whole show in and of itself, just driving on the freeway on 4th of July at night.
Yeah, I've always said I'd want to get in a plane and fly over.
Oh, that'd be cool. Yeah.
And watch fireworks from different municipalities and whatnot.
So what else is on your mind? I mean, we can make this a shorter podcast today. I don't expect anybody to call in.
We got 3 viewers, 2 from you and 1 from me. I can't
Oh
see
wow.
anything. Can't see anybody actually mentioning or saying anything.
Yeah, I mean, if you're listening to us, let us know what can we talk about for a few minutes for you.
Yeah. Did you want to? Well, you answered that one question that the lady posed in the group about when everything's going to correct. Which, I mean, I can read it, or do you want to read it and read your
I'm
question?
gonna pull it up. Give me 1 second. What group was that in? It's a Facebook
I have
group,
it pulled
right?
up already. If you,
Okay, yeah.
yeah,
Go ahead. Read. Just paraphrase what their post is about, and then
okay, yeah.
feel free
I
to.
can do that. So basically, it was mentioning how the fire insurance, and this is I would say this is in a Nevada County group, so we are pretty affected up here by higher rates. But they were saying with how cost prohibitive that it is, they see that it being difficult to sell their house because other people won't be able to come up here and afford it, and the mortgage on that could be so much more because now you've got this additional cost of the fire insurance. Um, he thinks it was going to be 20 to 30 years to resolve. Um, and then they were talking about Prop 103 and basically allowing insurance companies to basically let them have free reign, file for whatever they want. So that way they could come back into the marketplace. Prop 103 stops that from happening, and that's why they have the cap on the 6.7% rate increases. So yeah, just kind of wondering what it would take to actually be a healthy marketplace again, and what that looks like in the future.
Sure. And then I responded that rates are not going to go back to what they were a few years ago. I'm just
Right.
going off of memory here, but I'm pretty sure that's exactly what I said. Is rates are not going to go back to what it was a few years ago.
Yes, you mentioned that. You also did, obviously mentioning about how Fair Plan, that them being the carrier of last resort. Um,
Well, actually, why don't you key off of that one? So I said rates aren't going back to what they used to, and then
yeah.
a commenter said something that prompted me to give a longer answer.
Yep.
Let me go find it. While you're reading it, I'll go find it myself.
Yeah. I could give my 2 cents. I think that we're both kind of in the same headspace of what things are going to be looking like. I think moving forward, carriers are going to have to file for more rate increases. At that point in time, they'll finally come back into the market. Then there'll be more competition. But yeah, the days of the $1,000, $2,000 policies, depending on your coverage limit, your coverage A dwelling limit, and other risks or other coverage levels. I think that these days of the 3s to 5s, $3,000 to $5,000 premiums are kind of be the normal thing now, depending on where you live and also depending on coverage limit too. So
Mm-hmm. Yeah. So this person said rates are probably not going to go back to what they were, but how will it go going forward? Will homeowners just suck it up, or will they vote to change things? And so I said, great question. Many clients we talk to have seen year-over-year increases that I don't see as sustainable. The California Fair Plan is the carrier of last resort, and given that the Department of Insurance approved an assessment from admitted carriers for the first time since 1994, it's not like they're making crazy profits from the current premiums being collected. I'm of the belief that we will see even more assessments sooner than later. I didn't live in California in 1994, but it was a pretty big thing that everybody knew about. Do you remember 94? What was the big thing in SoCal
I
that caused
I
it?
wasn't selling insurance. I mean, I was living here, but I wasn't a part of kind of what was happening.
It was a huge earthquake, and freeways were destroyed or broken, and that's what kicked in for the California Department of Insurance to do that assessment. So that was a huge natural disaster. Now the disasters are more wildfires. So, but then I continue that comment with catastrophic risks have increased with corresponding increase in costs, premiums, both premiums and claims payouts. As seen recently, California cannot force insurance companies who are in the business for profit to sell policies at prices that don't make them a profit. Um, and to that, I said, I don't see how voting to change things will make a difference and wouldn't even want to venture a guess on how it will go going forward. It's hard enough helping clients that we have navigate now, right? So, I commented it. There was a couple of likes on it, and the person that asked the question says Prop 103 was passed in '98. It was meant to keep insurance rates low, which she's exactly right. She's asking if Prop 103 were to be rescinded, how do you think insurers would return to the state? And we know right now, I mean, I would still say 70% of insurers are not writing homeowners insurance in California of admitted. That's not about
Well,
right.
I kind of I see that a little differently. I mean, yeah, you're correct. I think that they're gonna file for rate and that they are writing quite a bit, but it's not much. But I think if you pull back 103 and you let insurance carriers now have free reign, um, and how long is that going to take for competition to set in, or will competition even set in? I mean, how many of them talk to each other? Uh, Prop 103 is supposed to be helpful for us, and I think if you give the
You
keys to,
mean us as the consumer, right?
yeah, as a consumer, and if you give the keys to the insurance carrier, I don't see rates getting any better. I mean,
I see rates going up faster and
faster.
they coming back into the market faster because we can adjust for that. But where that number falls, right, where rates will be to be at an equilibrium,
Yeah.
I don't know where that is.
And could that now if the rates go up to this $5,000-6,000 they're admitted, I mean, and I've got people leaving E&S or excess and surplus lines carriers to go to Fair Plan because of rate.
Hmm.
If Fair Plan can't, because they are regulated, kind of like how other admitted carriers are too. But
Hmm. Hmm.
if they maybe that's the thing. Maybe they'll also go and increase too because now they could file for rate increases.
Yeah, right. You're not talking about changing the fair plan to that degree.
Yeah.
Another point to that is that's a recent development, right? The fair plan. So in the past, we were told that you cannot go onto the fair plan unless there's no other option, and rate was not a consideration.
Uh huh.
You remember that?
Yep.
And then what was it? 4 years ago, I think now that stance changed, and it said price can be a factor in determining whether or not you can get to the fair plan.
Correct.
And I
Yeah,
think that was
before,
four
yeah,
years
it
ago.
was definitely a gray area and I don't think that they actually specified it because they weren't aware of how much they were being utilized.
Hmm.
So that's kind of what they put as a failsafe. But then, yeah, it started kind of just taking off, and people were still selling Fair Plan regardless of cost. Because that's the other thing too is either admitted carriers and or us as agents. I can't. I mean, I could offer these non-admitted companies and or admitted companies, but at the end of the day, the consumer is the one who's making the decision. And if they have a fair plan where another agent didn't give them those options, because you say you're supposed to go to 3 companies,
Hmm.
um, they're going to fair plan anyway.
Sure, absolutely.
I think the
I have
thing
that.
that scares me, and I think I brought that up in our chat, was about the availability that the commissioner put and offered the increase from 20 million to 100 million
For the commercial side of
for the
things.
commercial side.
Yep.
I mean, that just opens up more susceptibility for loss to fair plan now.
Oh yeah. Could you imagine 10 different HOAs with 100 million in coverage? That's $1 billion, right? $1 billion, and those burn down. That's instant assessments. There's no way the fair plan has enough capital on hand to pay for those.
Yeah.
So they'd be assessing the admitted carriers yet again.
Yeah, I'd like to see. Do you have that map still? I think I still have it somewhere, but it had
I'm,
the.
I'm sitting on one screen, so I'm not as fast as I usually am. Sorry.
Okay. I have it somewhere. It's that map that shows where all of the pain points are of the fair plan. You know what I'm talking about?
Exposure you're talking about?
Yeah,
Shows
how they had like a
California.
bunch in Big Bear, a bunch in Nevada County. Um, there was basically like 5 pain points of where if there was a fire in these areas, they would not be as robust as they are now. So now if you're adding an extra 100 million, if not more, to these other areas, what
Yeah,
is
I'm going to share that right now. You just got to approve it. Yep. So this is an article from May 15th of this year, and it says mapping the residential exposure and coverage of the California Fair Plan.
Okay.
So, and then I'm just going to scroll down through here. We'll close that. And this shows California Fair Plan residential exposure by zip as of 2024. So you can see where the red areas are. Like here's a very red area, 95959. Who lives in 95959?
Nevada City.
I'm just playing.
I don't live
Yeah.
there.
So there's that. And then Los Angeles, San Diego, you can see, I'm going to roll down a little bit more and you can see here. So the top 20 zip codes by Fair Plan, we're not talking about commercial, just residential exposure. And Truckee is like a great example, but let's skip that. Let's go to Placerville because I think, or Grass Valley, that's more relevant. So 95949 Grass Valley, the total exposure in 2024 is almost $3.9 billion. And total exposure in 2020 is 1.9. So you're talking about just about a $2 billion increase in exposure in 4 years.
Yeah. And Nevada City is less than, a mile away. So I like to just put those together because if there's going to be a large fire in our area, with how much trees that there are, it's definitely going to be
But
bad.
I think this is what you were talking about. We'll go over the residential exposure. I wonder if it shows.
It doesn't show commercial, it doesn't look like.
I'm looking for it, but no, this article is specifically about residential. So sorry, I don't have the commercial exposure, but
I mean, just looking at that list again, you can see, I mean, Truckee, you're going to be thinking about all Tahoe stuff, or kind of surrounding.
look at that change. That's insane. So we're talking about $7.7 billion of exposure. And sorry, the battery is going to last the whole time. No problem. But that's almost a $6 billion increase from 2020 to 2024. And I can tell you right now with certainty that number didn't go down. This exposure number in 2025, I guarantee is higher.
Oh, yeah. Easily.
Let me see if I can bring this brightness back up.
We got an active fire right now, too, actually.
Where? In Truckee?
No, it's called the Ravine Fire.
So if anyone's paying attention, I guess this should be a second place that we'll do is the best way to monitor fires is using the Watch Duty app.
Yeah.
It is amazing.
Do you have it up?
I'm pulling it up right now.
Oh, cool.
So it's app.watchduty.org.
Mm-hmm.
Is this screen showing?
Yeah, sure is.
Okay. And it's amazing. So I'm just going to say not now here. And then we're going to pick an address, 95949 for Grass Valley. And then I can zoom out.
Yeah, and you can get a free account on here. You can put your address in a profile, and then it'll send you alerts whenever there's something.
Oh, yeah. I watch
area.
this county all the time. I get all the alerts.
Yep.
But you're talking about this ravine fire, so you can see how far that ravine fire is, and then we'll go into here. So this is Camp Far West, I'm thinking. Is this Lake Camp Far West?
No, that is.
No, it is. That's Camp Far West.
Really?
I'm pretty sure, because that's Wheatland right there.
Yeah, Camp Far West. You're right. Sorry.
Yeah, so it's on the east side of Camp Far West. You can see the fire and where it's burning, its perimeter, and then if I click on this, it should give me news. And
Yep.
so this was updated 35 minutes ago, 35 acres or so, and forward progress has been stopped as of 2:10. So 35 minutes ago, they stopped it. Now they just got to figure out how to contain it and get
And
it to burn
it's
out.
been windy up here too, so I can see why it's moving.
But this Watch Duty app or Watch Duty website, it gives you pictures, it gives you resources, it tells you what's being done to fight the fire. It is the best, most informative thing I've found in regards to live information on fire.
Yeah. Yeah, and
Yeah,
they've got an app too. So if you want to put it on your phone,
mm-hmm.
to get your notifications, you can do that. That's what I have.
And then we could zoom out and see the fires throughout the area.
Yeah, there's that new one that's down towards Slow.
SoCal, right?
Well, yeah, San Luis Obispo, the Madre fire, 35,000. It blew up the other night.
Oh yeah, so you can see how big it is by the icon. See,
Mm-hmm.
So we'll go into the Madre fire. Let me roll down here.
And then the other cool thing is see the zones.
Yeah.
So that's another thing where you want to always be prepared on what your zone is, because they're going to call that out, and you should be registering that with the Office of Emergency Services. So that way you get a text alert whenever the fire breaks your zone,
Mm-hmm.
a warning, or because if there's an evacuation warning, see all the yellow? And then that's
so this
where
is a warning you can see here. And
Yep.
then what you're saying is these are under order to evacuate.
Yep.
So this is set, go, right?
Yeah.
That fire's 35,000. Wow. And then the containment, which is cool too, fires aren't good, but at least the data we're getting is good. So you can see this fire is only 5% contained. And this is updated as of 11 minutes ago. So very, very up-to-date information. And if we roll back in time,
yeah, you can see when it started, where, wind direction, all that fun stuff.
About 24 hours ago is when it started.
Yeah.
And it was a vegetation, fire. Sorry about that.
That's all right.
Look at that right here. Massive fire. Now, what else is going on in California? And it's not just limited to California, as you can see. The further I scroll out, the more you can see. And then you could change the settings to layers.
I guess real quick while we're talking about that, I did see a great post about to-go bags and what you should basically be putting in them. Or
why don't we add that to the list for next week and go literally over what a prepared to go bag is?
Yeah.
I think that's a good subject for most people to have.
Were you giving those away, or was that just hydrants that you were giving away, or extinguishers?
I was giving away extinguishers.
Okay.
And those aren't going to stop forest fires, but it might help with the kitchen fire. So.
Yeah.
What's this bell fire here? It's a little tiny. Oh, it's already stopped. So they put that out already. All right, let me go back to our other image. Oh, what happened? Give me a second here.
So yeah, I love
get warm.
I love the Watch Duty app. It's the best.
Oh yeah, by far. I don't know a better resource. You want to approve that?
Well, there's one person in here. They're from your agency. I was going to check and see if they asked a question at all and if we could have even seen that.
Yeah, whoever's on here, if you don't mind testing it for us, can you put a question in wherever you're looking from?
Put a question.
Can you approve that image, Brian?
What?
Can you approve the image?
Yeah. Will do. Sorry.
There we go. We talked a lot more than I thought we would on these subjects, so that's good. I'm not seeing any questions come across.
Okay.
Oh, what's this here? No.
Yeah, I was almost gonna try and log in. Here, I'm gonna do a quick test real quick.
Sure, me too. There's 2 comments. I see that
There
now.
we go.
Oh.
So yeah, you can whenever you're on your page, you would just there's a chat feature on there, and it does overlay it back to us.
Yep.
So I tested, you tested, and then someone said they didn't have a question either. So
Perfect. Well, I think we should call it a little early because 1, my laptop battery is about to die, and 2, I'm getting a lot of sun and I'm trying to dodge it. So I think that's good for this week. We'll pick it up next week, Thursday, again on Facebook and YouTube from 2 p.m. to 3 p.m.
You got it.
Cool. Want to end the live?
Happy 4th, man.
Yeah, happy 4th.
I'm going to end it.